Hello everybody, Michael Silva here. We got ourselves extreme greed still. Greed everywhere. We got a lot to discuss on today's stock market brief, which includes some earnings that have been going on. We're going to give you some earnings expected moves. We're going to give you some new expected moves from the daily perspective and just talk overall market on today's stock market brief show. If you're new here, welcome to the show. We like to do these typically Monday through Friday. Couldn't get a video out yesterday because I was busy, but hopefully you saw my tweet where I gave a quick rundown on the SPY. Now, if we take a look over here at the timeline for the CNN Greed and Fear Index, Fear and Greed Index, whatever they call it, you can see extreme greed is over here at that 75 level, and we've been actually up in this range for quite some time. And typically when we get into these higher areas, the market can obviously push higher, which we're seeing now, but we do typically see sell-offs occur, and then we see movements into extreme fear, which offers up potential buying opportunities. We're also looking at mid-year season, looking at seasonality from a pre-election year standpoint there in blue, looking at the NASDAQ, and the purple is the current line here. And we've been talking about how we're coming into the middle of the month, which is typically where we start to see things level out from a pre-election year standpoint. So that is also one thing to be paying attention to as we're seeing this extreme greed take place. But nonetheless, we are actually doing quite well on the day so far, leading up into the earnings, bulk of the earnings seasons. We finished rather unchanged, but green on the day. NASDAQ 100 was slightly down there, rather unchanged. As far as the 11 sectors, we do have some defensive sectors creeping up there, leading into some of these bigger earnings. Now, we did have Netflix report after the bell. You can see it tagged its lower earnings expected move right there, which was, I believe, plus or minus around $40 or $42. You can see it came down, boom, and it's just been kind of trading around in that area. That's why it's so important to find these expected moves before, from a daily perspective, from earnings perspective, and so forth. If you take a look at Tesla, Tesla's down slightly there too as well, but it's pretty far off as it stands while I'm recording this from its lower expected move. So yeah, we're seeing some weakness. It was unchanged for a while. Now we're seeing a little bit of weakness, so we'll see how the day rolls out or where we open come tomorrow. We do have some more earnings taking place tomorrow. We have ABT, PM, and JNJ. Those are going to report before the bell, and I pulled the expected moves for you if you'd like to see those on your chart going into tomorrow's trading session. So you can screenshot this, and what you'll see here is upper levels for whatever the product is. You'll see lower levels for whatever that product is, and then I even included a section here for 2 sigma moves. Now, what took place today on the SPY 15-minute chart? Well, we got outside of that weekly expected move as we discussed, and we just about tagged the upper daily expected move, coming into it, missing it by a few cents, which is pretty much spot on a $456 product, and we came back down to close right by, just doodling around that upper weekly expected move. We'll talk more about that soon. And you can see here for the Qs, it did finish down slightly on the day. We tried to get up to that daily expected move, couldn't quite make it, and then we came back within the lower weekly. So I'll be updating those levels here momentarily. But first, let's go ahead and take a look at the daily chart of the SPY. So if I'm taking a look at this, you can see the week, this was Wednesday, so we had 1 trading day, 2 trading day, 3 trading days, 3 trading days in a row, right? Up, 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 boom, boom, boom. Where do we tag? We tagged the upper weekly expected move, and we discussed this on the weekly recap going into Monday's trading session, where we said don't be surprised if Monday or the next day we come up here and tag the lower or the upper expected moves, because we've been seeing that often, and we've been seeing a lot of breaks outside of the expected move. So you want to be aware that, hey, if we start getting positive earnings, or if Tesla turns around, right, that's a big one that can really move the market, potentially Netflix too. This thing could start really getting outside of it, where we can see another squeeze that we've seen prior. Because remember, this is what the options market pricing as far as risk. You have that 68% probability that we close within it. However, what happens when the market gets it wrong? Well, they have to hedge, right? Dynamic hedging, buying into more buying. And the same thing could go selling into more selling on the outside. Remember, the last 4 out of 5 weeks, not including this week, we closed actually outside of that. So we'll see here, looking at Tesla and Netflix in the pre-market or the aftermarket, I feel like we can potentially come in. You can see this candle right here. If we were to draw this out, okay, this daily candle, that's the body, and then you have the upper wick, and you have the lower wick. This right here, after a big authoritative couple candles, right? So you have a pretty authoritative candle, you open and you close near the high, you open, you close near the high. Well, let me go back. Oh man, I just deleted the candle. It's okay. I'll redraw it. So it'll look like this. This right here represents more indecision, right? You opened up and we came all the way up, we came down, we came back up, and we closed rather unchanged on the day. And you can see by the length of the body, the momentum is slowing right here at that. So if we get some more weakness, potentially earnings, to take more of a breather or doodle around right here at this seems probable, or seems possible, I should say. And when you take a look even deeper at the monthly time frame and you look at the monthly expected moves, we did come right up to that and just backed off slightly there. If you take a look at the updated expected moves, 452.65, 457.75, so upper and lower as we're trading right there by the weekly expected move. So even a move down to the lower daily expected move, say tomorrow, that's still in a healthy short-term uptrend. You have a 5-day moving average that's still inclining. You're above the week-to-date anchored VWAP, so pulling into these areas can offer up potential opportunities to trade back up into this on intraday or potentially even on Friday. So I'd be still watching as that unfolds here throughout the week, but I'd be paying attention to these levels. Just be aware that you want to go into the lower time frames if you're trading intraday to see how price action bases out, because you don't want to just buy into the weakness. Like say if you're watching the week to date anchored VWAP and you buy right here, there's no reason why I can't just cut right through it and cut right through that and come to the 5-day moving average, and then you might get out, you might try to re-enter and get out, and then you get chopped up in there. Whereas if you just waited for price to come down and then maybe do something like that where it has a matching lows, and then all of a sudden you have a higher high and a higher low, and then you buy through this strength right here, and then you get to actually add a stop that's pretty, it could be right here, or you can do 50% stop here and 50% stop here, and you're buying into this strength hoping that we get a further push, and then you have really controlled risk in that type of environment. If you take a look at the Qs, we are trading right at the monthly expected move. If I look at the daily time frame, we're trading right back beneath the weekly expected move. So I'm not going to reiterate that there too much, but I'll give you the updated levels here on the daily for the Qs: 389.14, 382.16. And yes, if we even come down to here, be aware that would mean we're getting below the week to date anchored VWAP, but we'd be still above an inclining 5-day moving average. So always watch. If it comes down, when it comes back up, if we start trading back up into it, see how it acts around the week to date. Because if we start breaking down, it could potentially act as a level of resistance, right? And then you might be able to short into strength or short into weakness if we do something like that. Whereas if it comes back up and breaks up through this, that would be the stop, or a potentially play to the long side to come back up to the upper weekly and or upper daily too is an option. Remember, this thing looks like it's just consolidating here as it stands. So yeah, even if it takes on more weakness, shakes out, could still very well just be in this overall uptrend and potentially have further to go. Okay, so that's always an option for bullish activity. If you are going to be more bearish, just be aware that tops sometimes take time. Sometimes they happen fast, sometimes they take time, but you want the 5-day moving average to flatten out to start to roll over, and we're just not there yet. If we take a look at the IWM, I'm just going to show you the daily and monthly time frame. We're above the all-time high anchored VWAP, and where did price come from? Really, it came from the last couple weeks of trading, basically from down here at 180 to up here at 196. A very straight shot move with relatively no breathing, and we've seen this multiple times. We've seen it here, we've seen it there, we've seen it here, we've seen it there. Okay, and they all resolve to the downside. Now, if we're going to resolve to the downside, that doesn't necessarily mean it's bearish. What you want to see is this all-time high anchored VWAP hold. You can potentially pull up the 200-day moving averages, the 50-day, and so forth, but I'm just kind of paying attention to this level. If it comes down, I'd want to see this stuff hold and potentially this to start curling back up and add more if we can get some strength to come test that 200 and potentially break further, right? These have been a very big lagger this year versus the NASDAQ 100. So if we're going to start seeing a rotation into small caps, this is still early, in my opinion, if these levels can hold. Now, if it starts breaking down, well, then you start looking back at 180 where we had prior resistance and prior support. So it'd be back within this kind of zone right throughout there. Now, if I show you, though, the monthly time frame, right, we've already came a long way as previously discussed, and we still have a lot of time left in the month. But if we look at the monthly expected move, we're actually trading outside of it, and we're not too far off the quarterly expected move. That's just slightly above 200. But seeing as how we're kind of moving out of that down 20% territory from peak to trough, so that's bullish. But we're also outside of the the monthly expected move. Maybe the weekly too. I haven't checked. I have to check that. But this to pull in a little bit might make sense. If we take a look at the book map, this is trading software that I use intraday for all those intraday traders. It allows you to see behind the candlestick and actually see where orders are hiding to get more specific entries and exits and so forth. So I'm taking a look. And by the way, there's a pinned comment that offers a discount off monthly plans and then also quarterly and yearly. You can get up to around 50% off, I believe, on this software. But then you also need the data feed too from a third party. Now, if I take a look at this, this is where we closed on ES. This is the expected move. And 46.18 would be the upper expected move that we'd be watching for tomorrow. Okay, so 46.18, that's right around this area where you can see there was orders hanging out there earlier today. Then we did have a couple of things in the after hour session come about. So these might be interesting levels to pay attention to coming into tomorrow. They're not like gigantic orders, but they are decent size to maybe pay attention going into tomorrow's trading session. The lower expected move is 4573, and go figure, that's actually puts us right down into this level here. So I'd be paying attention to this. If it starts breaking down, we can start potentially looking at the 4567 and then down here at 4557. If I take a look at the BP-SPX chart, this thing is still screaming red hot. Remember that when we get into these frothy areas, we've seen pullbacks, especially when the RSI gets in overbought condition. And then obviously we pointed out that when these starts crossing back down through these overextended readings, you typically can get some sell side activity there too as well. If you take a look at the bullish percent index for the technology sector, still a big bearish divergence there in the RSIs, and the reading is quite heavy. It's at 90.77, means 90.77% of the stocks in the in the technology sector are on buy signals based off of the point and figure charts. So to take a breather here, I would not be shocked and or surprised in the slightest. If we take a look at the Nizey-McClellan, the Nizey-McClellan oscillator, the traditional calculation, we have a subtle divergence. It's building in rather overextended area. So we got that so we got a high and a higher high there. We have a high and a lower high on the indicator itself, showing us that potentially weakening momentum there. And then if you take a look at the summation index, the parabolic SAR ticked over right here for a potential change in trend. Well, we're right here, and boom, we've been up. Okay, so it's been working out rather well, and we still are in bullish context. What you want to wait for is this to start turning back around, parabolic SAR to uptick, and that might give us indication of a potential change in trend or a period of consolidation. If we take a look at the dollar was slightly up today. Remember, this big move down helped out a lot of assets, including the S&P 500. Okay, but we're starting to kind of, base out here, so we'll see if it's going to bounce itself back up off these overextended areas, or if we're just kind of bear flagging to potentially take another leg lower, which could very well help out various commodities and asset classes globally. If we take a look at the 10-year yield, right? So this is actually just kind of hanging out at this prior area of resistance. The resistance is acting as support now. If this starts breaking back down, it is a little interesting to me what the bond market is doing. I'm just using TLT as the proxy, but this is a very strong move very quickly in both directions, right? So we're seeing a lot of volatility here taking place these last few trading weeks in bonds. And if bonds could start, breaking through this 102 and reclaiming and potentially take 107, I've been saying that we've been potentially right around the stage one or in a stage one in the business cycle, which typically means is when we move into contraction, and that's when recessions typically happen. And moves like this could very well, it's still early to tell, but these strong moves to the upside could be sniffing out potential recession. So we got to just keep our eyes on the bond market because these strong moves and this volatility is worth taking note. If you take a look at gold, I did a recent interview with Alistair Still just to get an update on the gold market. You can see here price was contracting. We did break out and it's still holding. If you miss the move, wait to see if it consolidates and resets itself, right? If it pulls back down, boom, something like that, we might have ourselves a shoulder, a head, a right shoulder, and then the neckline could be right around 2,000, and then we potentially break to go try to test that prior swing high. If you take a look at oil, we're still holding below the 200-day declining moving average. If you take a look at copper, also is backing off, right? We saw that strong move. We said that, hey, these type of moves, both directions, right? Strong move to the downside, you can typically get reflexive bounces, while strong move to the upside, we're trying to see them move down too. And we have that lower high, and we have a higher high here in the S&P 500. This has just been squeezing up, which will have to digest or take some sort of a break here in the near future. That's all I really got for you on today's episode, everybody. If you haven't done so already, you can look at the pinned comment where I give information and a couple of stuff like the swing trading community here. That's only $9 a month. And then I also have Interactive Brokers link, one of the platforms that I'm fully moving over to. I trade Interactive Brokers, but now I'm going to be moving over there completely with my larger portfolios because I've been having issues at my other platform. But they've been good, so I'm not going to talk poorly about them. There's also on that link, if you look at the campus button, so right here, they offer free educational stuff like webinars, courses, and then they have great articles there too as well. So be sure to check that out if you haven't already. That's all I got for you. See you later.